I keep saying this because I think it is underestimated. The amount of talent that we're seeing on the ground across the different countries. And I've spent time, and if you follow my travels, you can see that I've spent time across the region quite significantly. And it doesn't matter if I'm in Morocco or if I'm in Egypt, or if I'm in Oman, in Jordan, if I'm Kuwait, or of course Qatar. I see talent everywhere.
That was the voice of Michael Lints, partner MENA at Golden Gate Ventures. I am your host, Ali Zwail, and this is the Startups Arabia podcast, where you learn about the Arab startups ecosystem from the best founders, investors, and operators in the region. My guest today is Michael Lints. Michael has been a startup operator, investor, and mentor, and is currently a partner in Middle East North Africa at the Singapore-based venture capital firm Golden Gate Ventures, while he's based out of Qatar. Michael has helped support firm and portfolio level priorities that have spanned fundraising, capital allocation, and corporate development, helping to raise over $60 million for GGV and its portfolio companies. Michael's journey began in 2000 when he co-founded an IT managed services startup in Holland that was acquired by a large data and telecom company 6 years later. In 2007, he founded a venture fund focused on Dutch small and medium-sized enterprises to help them with capital financing, business development, and strategy. During the same period, he was invited to join the Economic Development Board Rotterdam as vice chairman and launched the Young Economic Development Board. Outside of work, sport is an essential part of Michael's life. He's a former member of the Dutch karate team and a serious cyclist. Michael also actively participates in Ironman 70.3 races and marathons. He's also passionate about social justice and co-directed an award-winning documentary on the subject called Broken Chains. Welcome to the Startups Arabia podcast. My guest today is Michael Lints, partner MENA at Golden Gate Ventures. I'm very excited to have him on because he's based in the Qatar ecosystem and also because of his very wide-ranging experience, both career-wise and geographically. Welcome, Michael.
Thank you. Thanks for having me, Ali. Looking forward to our conversation today.
Yeah, same here. Michael, as I was reflecting on our conversation, I was wondering where to begin. You know, you're investor, entrepreneur, documentary co-director, Ironman contestant, karate champ. Who is Michael Lints?
I'm guessing someone with quite a bit of energy and way too many hobbies. But I think overall, just being inspired by people around me and always sort of striving and achieving to do more.
So, I mean, maybe we can go to the beginning. After being in the corporate world for a while, you co-founded a company in your home country of Holland, and it was acquired in 2007, if I remember correctly. And then you worked supporting SMBs in Holland, and then you kind of made the move into a totally different industry, VC, joining Golden Gate Ventures, and also like halfway around the globe to Singapore. So tell me about that. I mean, how did that come about?
Yeah, it has been. If you phrase it like this, it's a very it sounds like a very long journey. And I'm guessing looking back at it, it was quite a bit of a journey. I say the work that I'm doing now at Golden Gate Ventures versus when I started my career, for some reason, for me, it doesn't feel as different. I've always been, I have a computer science background, so technology has been like a second nature for me. There's always been technology around me in a work setting. So even in my first job, when ING Bank launched one of their first e-commerce portals back in Europe. I was heavily involved in putting together the structure, co-leading the team, and this is back in. I have to think back. Oh my goodness, this is going to give away my age. This was back in 1997, 1998. So I'm talking early days from an internet standpoint.
Yeah.
And the funny thing is, we actually worked with a few startups that were leaders in the, I'd say, kind of in the IT and e-commerce space already. So it's been kind of part of like a very very long journey, a few decades. So the progression towards becoming a VC for me was a very natural progression. Being involved with startups, being involved with technology, even my work at the Economic Development Board, working for the municipality in Rotterdam, working with the International Advisory Board that was chaired by the Prime Minister. Even that was um, like public-private relationships. How do we leverage investment funds to further the economy in the Netherlands and specifically in Rotterdam? I remember very well that the first idea was to build a fund for the creative sector. This is like back in 2008. So I've always had sort of the natural inkling to combine, I guess, technology, investments, public-private relationships. So to me, getting into venture was a very natural progression.
Okay. And for Golden Gate Ventures, can you tell me more about it? What the thesis is for Golden Gate?
Yeah, and maybe just a bit of a backstory, because we always the first question people always ask us is, why are you guys called Golden Gate Ventures, with an office that is headquartered in Singapore?
Good question.
The premise really was, we initially thought about kind of bridging Silicon Valley, to initially Singapore, and of course Southeast Asia as a start, and it was really about bridging ecosystems. So the learnings from sort of co-founders, Vinny and obviously Paul Brigio as well, and Jeffrey Payne, was all of them spent significant amounts of time in the Bay Area, and sort of leveraging that, I guess, history and that experience and bringing it to the Southeast Asian context. That was a big part of the Golden Gate Ventures brand, and sort of the bridge was metaphorically, a sort of part of that as well. Hence Golden Gate Ventures. But at the start, when back in 2010, 2011, when Vinny and Jeff started the idea of Collegiate Ventures, like venture in Southeast Asia was very early. There were like a handful of funds, a lot of them were government backed. But the premise really was, there's amazing talent in these markets that are building specifically for Southeast Asia. And why not back them, like companies in the US or India or China or Europe are getting backed. So that was really kind of the start of Collegiate Ventures, back in the day. And the start, I mean, I met Vinny and Jeff at the early days, just when they launched their first fund. And I was really inspired by kind of going against the grain. Instead of, building a fund in the US, they built a fund in Singapore, really being sort of an added value partner, helping the founders and just being part of that journey. That just inspired me. So I told my wife, Marika, I said, "Hey, I think this is going to be a major story in the region. Why don't we just pack our bags, join the team, and then see if we can sort of help and build and scale their business?" So in 2013, made the move, and really sort of the thesis was, find these regional equivalents of global amazing companies. So we invested very early, for instance, in a payment gateway that was focusing on the gaming publishers and allowing them to deduct payments from cell phone minutes, scratch cards, bank accounts, and so it helped gamers do payments early on. And those stories came from Southeast Asia as opposed to coming from China or India or any other market. So that really was kind of the premise of the fund when it started.
Nice. And I mean, it seemed to have also been golden timing in the sense that this was just the right time to go into Southeast Asia deeply with startups. And maybe that's a good segue to go kind of into why you decided to set up the office in the MENA region, you know, uh, and what the what the focus of that specific office is.
Yeah, you're absolutely right. That timing is in venture is of the essence. It makes a very big difference if you invest in company 1, 2, 3 or company 1,000, 1,001 or 1,003. It makes a very big difference. I think similarly for expanding here, I've spent quite significant time initially between, I would say more Dubai, Abu Dhabi, obviously, and Saudi as well, before we decided to expand our office. But I think a few things that were trigger points for us in terms of making the expansion happen. One is we have long-standing partners in the region, so we've co-invested and worked with a number of institutions across the region. Whether it is in Oman, whether it is in Dubai, Abu Dhabi, Bahrain, and that really helped us get, I would say, comfort around building the expansion here. Then the second thing was just around talent, and I keep saying this because I think it is underestimated, the amount of talent that we're seeing on the ground across the different countries. And I've spent time, and if you follow my travels, you can see that I've spent time across the region quite significantly. And it doesn't matter if I'm in Morocco or if I'm in Egypt, or if I'm in Oman, in Jordan, from Kuwait, or of course Qatar. I see talent everywhere. There's different degrees of talent. Very honestly, of course, an engineer from Jordan looks different than an engineer from Qatar, or like an engineer from Dubai. An engineer that spent time at Stanford or maybe MIT comes back to the region looks different than someone who is homegrown. I fully understand it. But one of the trigger points for me really was seeing a lot of talent, eager to build companies, and being inspired by what they've seen in other markets. So that was another one. And then so partners was one, talent was the other one, and I would say our ability to make a difference in the region. We wouldn't have launched a fund here if we would look the same as every single other VC fund. So we try to see, like, looking at our peers, and I call them colleagues, how can we make a difference as a fund? It obviously helps that we have a background of 14 years of investing in Southeast Asia. There's a massive legacy working with LPs, generating exits. We have two IPOs in our portfolio, working with institutions like the NYSE in New York, going through the ups and downs of different cycles as well. We've been through booms and busts in Southeast Asia as well. So all of that experience we kind of bring to the region, and for me, it was sort of sufficient enough and for our partners here to say, hey, it makes sense to now kind of start a fund and get started.
Yeah, and are you do you have like specific verticals that you invest in, or is it general across, and any geo constraints?
That was the longest debate ever. But I'd say between ourselves, the partners of obviously in the Singapore office, my partner Hussein Abdullah here as well. Like, if you want to make a difference as a fund, you know, are you going to go the generalist route, or are you going to go the specialist route? Um, this is going to be a lame answer. I think we're in between. So the fund is in general agnostic. So we obviously look at as much as we possibly can. So we look at anything from fintech to healthcare, cybersecurity. Obviously, AI is undeniably present in the region. You look at food security, you name it. So we look at all industries, but I would say we're leaning towards a bit more of a specialist view, because we do like companies that have or are striving towards what we call defensible technology. And the reason why that's important to us is one of the learnings we've taken away from investing for a very long time in Southeast Asia is, at some point in time, your fund has to generate exits, and whether that is through M&A or listings or maybe potential secondaries, the positioning of these companies the exit is dependent on the positioning of these companies. Companies that have defensible technology, it allows them to potentially, it doesn't have to happen, but potentially become global companies, and that allows them to have or generate larger exits for a VC fund like ours. So we take a very deliberate approach where we're trying to find firms that work with, global enterprises as clients, or have the potential to become more than just a regional company, but even go into other markets as well. So those deals are slightly harder to find, but I would say that is where we focus our strategy and our thesis on.
Yeah, so you kind of keep your funnel open for everything, but you really search within it, or you filter it with this viewpoint, so to speak, of
Exactly.
technical and global differentiation.
Yeah.
That's really cool. So, I mean, you were recently, I mean, speaking of your relationships with the NYSE, you were recently on Floor Talk, the NYSE program, and you mentioned that you have made, I think, 3 investments already out of the Qatar office. So, can you tell me about? Can we like double click on one of them? Maybe tell me more about it. Why you decided to invest?
Yeah, sure. And please interrupt me because when it comes to the portfolio, I can speak for hours. So I'm going to try to keep it concise.
Go ahead. We wanted to double click, right?
Yeah, exactly, exactly. No, I'd say the maybe I'll speak about the actual first check we wrote or the first commitment we gave to an investment. Is a company called Biosapien. So they're based out of Abu Dhabi, although they are in between. I have to say that they're in between the US and Abu Dhabi. And this also kind of speaks to our thesis that we feel there is an incredible opportunity for now international companies to have this distributed base between mature markets and emerging ecosystems. And I think
Hmm.
there's a massive opportunity there. So Biosapien fit that narrative. Then the second narrative was just on the technology side. So they're a biotech healthcare fund. So they focus on drug delivery for cancer treatment. It's a big topic. There are developments that are happening there. They've developed what is called the MediChip. So the MediChip is a 3D printed, yeah, we call it a chip, or it is a method that helps with delivery of chemotherapy. And there's going to be other applications down the road as well. But what it excites us was really around the potential positive effect on the treatment for cancer patients. I think that is one. Given impact on healthcare is important to us. The technology aspect, which is again defensible technology. Once you get it right, you really get it right, and it's going to be very hard for others kind of to disrupt using the same technology. But then the third item for us was really around the founder. So I've met Khatija in 2020, early 2024, maybe
Hmm.
even late 23. It's been a long time. So I've met her over a long period of time. I've seen her in action. I've met her through Hub 71 in Abu Dhabi, and I can still remember sort of our first conversation where I was just inspired by the fact that she is really really keen to solve this problem, and has the vision that I will run through walls to make this happen. So all of these combinations, kind of solving a big problem, having proprietary technology which is in development, and also just an amazing founder. I think those three combinations were convincing enough for us to make the investment. What is also interesting is, and I've shared this earlier, um, if you look at the region itself, and I'm not going to single out Abu Dhabi because I think it goes across the region. If you look at healthcare, and in this case, if you look at biotech, you kind of need buy-in from the departments of health and ministries to kind of help you with whether it's clinical trials, going into commercialization, partnerships. The openness of the governments to work with startups to go into these sort of ventures that are still relatively high risk at an early stage and sort of take that leap forward to say, hey, this technology can actually be fundamentally changing our healthcare landscape. That's impressive. And I think more companies should take advantage of having this right next door, or sort of, in all of these countries. So that all combined make this like a very convincing investment for us.
Yeah, and maybe I mean uh, a little couple of things as I reflect on what you're saying to think about together. I mean, the first is the fact that you met the founder quite a while before you decided to invest. So you took some time.
Yeah.
Sometimes, we don't have that luxury in the sense that there are sometimes very hot deals, and the startup is running a process, and they're like, we're going to have the call today, and you need to tell us what you think by X time, and and then X-1, they tell you we have two term sheets, and when are you going to submit yours, and all that. But and you don't really get time to know the founder on a personal level. How do you feel about these types of deals? Do you?
Yeah, if you ask me, if you would ask me 20 years ago, I would have probably said, if it's a hot deal, we'll chase the hot deal, we'll get it over the line, we'll expedite our investment committee.
Mhm.
But you're asking me 20 years later at 49, um, and the answer is going to be way more nuanced. There are a
Mm.
lot of deals that are under high pressure and don't give you the luxury to, you kind of take time, get to know the founder, get to know the logic behind the deal, review the technology behind the company, which is an important part for us, understanding how this is going to impact a large market. So it does happen that we walk away from a deal or don't do a deal because our timeline between meeting the founder and getting the term sheet over the line is just too short. And I'll tell you why that's important for a number of reasons. It's not only important to us as a fund, it is also important for the founder. You have to imagine, like you're, let's say you're raising a seed round. Oh, sorry, let's say you raise a Series A, and you're right. There's four term sheets coming in. Everyone is like falling over each other to take the lead, give you the terms at your valuation, at your terms, because they want to get into the deal. And then all of a sudden, you don't have had enough time to work with each other, get to know each other. But then you're stuck with each other for 7, 8, 9, 10 years, right? So it's venture. So you're stuck with each other for a long time. Let's say at best case scenario, you're stuck with each other for 5 years only, because there's an exit after 5 years after Series A. That's still 5 years. You have to be able to sit in a room together, work together, trust each other, bring the company to a different level, and you're gonna have ups and downs. 100%. That's human nature. That's going to happen. So if you don't have the time to get comfortable with each other in terms of us as an investor on your cap table and you as a founder in our portfolio, it's just not going to work out. Of course, it happens. So I would say there's exceptions. There are times when you meet a serial entrepreneur, and it's a warm introduction from a peer VC. It's a firm that you trust, that you worked with, and they say, "Mike, this is an amazing deal. We've vetted the founder. We've worked with them before." And you can grasp within a few interviews whether that's a fit, yes or no. But these kind of very hot deals that are telling you, Mike, you need 2 weeks, and I need an answer, and we don't have time to do our diligence. We have to walk away from those. Yeah, we're investing money that is not ours. We're investing money that is from someone else, which means that we have to take our proper steps. So we're very comfortable walking away from deals. And even if our limited partners say, "Hey, Mike, why aren't you guys in the deal?" I'm very comfortable explaining that we feel as a firm we need to take our time to properly vet a deal before we invest.
Right. Yeah, reasonable. And speaking of which, I mean, do you guys, which stage do you invest in? We didn't mention that in the region, at least.
Yeah, I'd say that the general sense is like up to Series B,
Hmm.
and then if
From series,
companies,
so starting from pre-seed to Series B, or like from Series A to Series B,
I'd say C to Series B is kind of where our
right?
sweet spot sits.
Hmm.
That being said, when deals are international and they are expanding in the region, we can look at deals at a slightly later stage as well. So they could be Series B and up as well.
All right. All right. Going back to Biosapien, so I mean, the interesting, I think it's a wonderful thing. I think if, and I've heard about their technology, and if they can really figure it out, and I hope they do, and I'm sure they will, and deliver that chemo right where it's needed, so that all the side effects, are greatly diminished and people don't suffer. Because I'm sure all of us know people who, what going through chemotherapy isn't easy. That would be a wonderful thing to have. At the same time, sometimes I hear people saying there are challenge. This type of company, it takes a while to get it across the finish line, so to speak. There's a lot of capital needed to do that, and there are challenges in the later stages for these types of companies in the region, if they stay in the region. So, did that factor into your like decision formula? How do you see this?
No, it's a very good point, and it's also a point that I try to make when we are doing deals. Is we don't look necessarily just at our investment round and say, hey, our work is done, and then hopefully someone will pick it up in the next round. I think that is very dangerous to think that way. So what we try and do, as to the best of our knowledge, is we speak with industry partners before going into a deal. So secret sauce. Before we invested in Biosapiens, we had an extensive conversations with the industry. So we spoke with people across Turkey, Europe, Germany, the US, in New York and Boston, that have looked at similar technology. We had an understanding in terms of the corporations or the institutions they work with, who looks at typically acquiring such technologies, who are typical investors, sort of at the stage later on. Now, the difficulty here, or maybe the difference here, is that it's a company that is now based out of Abu Dhabi. How do you position that in an international market? And I think this is where we really sort of rely on our thesis. The work we do before a deal is we try to position these companies already in our own network, and then we try to co-invest. If even if we lead a deal, is co-invest with strong partners on the capital as well. That can be helpful in the next capital raise. And I'm talking beyond, like, people often think that helping in a capital raise is like placing a phone call, telling your friend who runs a Series B fund, "Hey, put some money into my company."
We wish. Huh?
Uh, yeah, it's a bit different, right? So what we try to do is like as we invest, we're having conversations. Sometimes we even travel and meet these partners and say, "Hey guys, this is the investment. This is the thesis. Would you mind, doing a session with us and the founder, and sort of give an explanation of your view of where they should be heading towards. What are your KPIs that you think are important for this company?" And the reason we're doing this, even if this company doesn't invest in their Series A or their Series B, it still gives the founder like a lot of sort of KPIs to work towards to get them ready for the next round of funding. So it is more work. Hence, we tend to focus on a smaller portfolio, but it allows us to really be hands on with our founders.
Wonderful. So, I mean, and how do you guys make decisions? Is there like in the investment committee, do you have to have unanimous decisions, or is it majority based, or is it just the partner decides after a discussion?
The partner who yells the loudest. No, we have we luckily have. I've been working with Vinny for 12 years, and then Hussein has become a very dear friend in the firm as well. We have a very, I call it like an intellectual debate. So the moment we present a deal and everyone agrees without any arguments, something's wrong with the deal. We always want to have some level of pushback, critical questions, critical thinking. Even if someone likes the deals, we want them to be as critical as possible. But then to your question, yes, we do require an anonymous vote. Um, we don't want anyone to say, "Oh yeah, I told you so." So we get an anonymous vote. Everyone buys into the deal, but we have a very critical conversation before the deal goes ahead. What I also like about what we do in our firm is we speak to founders individually. So sometimes when founders pitch, I would ask them, "Hey, would you separately have a conversation with Hussein or separately with Vinny?" And what it allows me to do is just it gives me their different viewpoints on how they view the founder, different experience, different dynamic as well, and it all goes into like eventually our memo in terms of when we get to a deal decision.
Nice. Um, Any secret sauce for the memo? Speaking of the memo, I mean, are there things that you do that you think are really cool that you're willing to share? Of course, not the real secret sauce.
It's a very good question, and I have to think about it. No one has asked me this before. I don't necessarily think there's a secret sauce, but I do like. I want us to become mini experts on a certain vertical when we invest.
Hmm.
And the reason why that's important for us is if you want to help the company, you have to understand what they're going through and what they're building. So as part of our memo, I'd say that there's a significant portion which is proper research, which goes into our memo. Um, it's also it works as a reference point for the fund, obviously down the line as well. But I wouldn't say that we have a certain secret sauce. I think the secret sauce is in our internal conversation as an IC, and sort of combining our different viewpoints on a certain deal.
Right, and everything you've seen before as well. So, I mean, maybe like zooming out a bit and looking at the region, what do you think is different about this region? Are there things that are like unique that you haven't seen in other regions? You've been like in Europe, in Southeast Asia, now here.
Yeah, it's the ability. This is really a differentiator. The ability to start from scratch. I know that there's long histories from investments. The sovereigns have invested globally for decades and decades and have deep networks in all markets. But what I like about the market itself here is that you and I can think of an idea tomorrow and present it to a ministry or a corporation, and they would say, "This makes a lot of sense. Let's go all in and see if we can make it happen." That level of commitment in terms of bringing in innovation, I think is unparalleled. I've only seen this similarly in markets like Singapore, where the government really kind of thinks like a company, and very much sort of leading forward. And we're seeing it here as well. The other thing that is often underestimated is just geographically, and it might sound really silly, but your ability to travel on a very frequent basis and be in front of people, whether it's
Hmm.
founders, investors, your peers, it's so important in our industry. Like you cannot do venture behind Zoom. I think we thought so during COVID, or we had to during COVID, obviously. But for you to get into the best deals, meet with the founders, be supportive, be close to your limited partners, be close to the ecosystem. Your ability to travel in the region and outside the region is so important. And infrastructure from a traveling standpoint here is absolutely amazing. It is so efficient, and it just allows you to be productive even if you are traveling, and that's fairly unique.
Interesting viewpoint. Okay, so let's go to what everyone is talking about these days. So AI, software startups, they're going through a major change. What are the biggest effects you think are happening? What's changing the most because of AI? What's the effect going to be?
Um, the biggest effect currently is that everyone has an opinion about how fast things are changing.
Hmm.
If I look, I'll take a bit of a contrarian view. If I look at AI adoption, and I mean true adoption, like if I get up in the morning and which one of my routines are different because there is AI. So if I go to the office and which part of my which element of my work is different because we have agentic AI or we have AI embedded in our workflow. If you go to a lot of SMEs and just ask them, you ask the founder or the entrepreneurs, like which part of your day is different now because you've leveraged AI in your business. I can guarantee you that 90% will say it hasn't changed much since as of last year or the year before. And the reason is that although there's a massive amount of development being done, the actual implementation of it, um, and in its daily usage, I think we're still scratching the surface. So, to give one example, we've spoken about whether it's agentic AI or AI workflows. It doesn't really matter how you call it, or whether it's AI replacing B2B SaaS. If you look at sort of in general, yes, it has 100% made workflows more efficient, but the adoption and education part in terms of day-to-day usage is still relatively low. So if I look at, we still have like long ways to go in terms of like it really being a major impact. So I think the developments are way ahead of the usage itself. Um,
Mm.
so I think one that there's a massive opportunity there, and I really think that the adoption education part is where we're going to see a big differentiator. Like fully automated workflows, we've even invested in those, and I see the massive potential, but the learning curve. You have to think like you're like a
Mm.
massive. Let's say you're a oil refinery. You're absolutely unable to change your entire workflow to an automatic workflow between day one or day two. That is not possible. I'm even going to argue that between year one and year two, that's nearly impossible. That's going to take 3 to 4 to 5 years to be
Yeah.
fully automated in terms of workflow. So we're getting there in terms of smaller steps, but adoption is still relatively low. But I'm super excited about the potential, and the reason is the moment we're making these larger industries really more efficient from a productivity and workflow standpoint, I think we're then going to see the effect of AI. So then you can think of how can we really innovate as a business. So we look at our industry and how can we innovate leveraging AI. So to give an example, we spoke about our deal sourcing is going to look different a few years down the line. 100%. That's 100% because we now have data points that we can leverage, and with our thesis, you can argue that with AI, hopefully into the deal flow, into the identifying companies, part of it can be done through leveraging AI. We've looked at um, um, fault identification for large infrastructure projects, where basically leveraging both historical data, performance data, and analyzing it, we can actually say with any infrastructure, whether it's telco, data centers, refinery, manufacturing, we can do fault detection way better and way more efficient, and hopefully do more preventive. Within healthcare, I'm still insanely frustrated that I have to wear 3 different devices and they don't speak to each other. Well, they speak to each other a bit if you use Apple Health, but it's still like an awful product. So I think there is a lot we can do still moving forward. So everything excites me, but I also realize that we there's a lot of development where there is still not real adoption just yet.
Yeah. We're really, the work is on not the technology side. The issue is how it's going to be adopted and how it's going to imbue our lives naturally, so to speak.
Absolutely.
And you touched upon how AI is changing the industry. So you said in deal flow, for example, we're probably going to depend on AI tools more and more. What about the industry structure itself? Do you think it's going to change somehow because of AI, or uh, disrupt the disruptors?
Yeah, I don't think AI is going to be the catalyst. I think the convergence of different capital structures, I think that's going to be the change of our industry. We're seeing private equity firms that look more like VC firms and VC firms that look more like private equity firms. We're seeing private equity firms or venture capital firms applying for different licenses in the US that allows them to invest in public stocks and hold public stocks as well, so that they're becoming more like a multi-asset company as opposed to multi-asset manager, as opposed to
Yep.
a pure play capital fund. I think that is only going to increase over the years. And this is because of a few things. I think one is still the abundance of capital globally. Although capital might be, liquidity might be stuck in markets, but there's still a massive amount of capital available that is liquid. I think because of it, we are going to see changes in the way we sort of manage assets. I think the lines between public and private ownership is going to be blurred, where VC funds will have more public ownership in terms of stocks, and maybe we'll see more of the private equity firms, again, be more involved in venture capital. We've already saw this during COVID, where like the large PE firms all of a sudden, and the hedge funds all of a sudden came down to VC. I think that was opportunistic, but I think that was a little bit of a curtain view of what it's going to look like over a longer period of time. We're going to see more greenfields. We're going to see more what I call special sits opportunities, where you might have VC firms club together more frequently in terms of certain assets. So I do think that our industry is going to change over the years. But again, the driver is not AI. I think the drive is going to be sophisticated capital, trying to find new ways, to obviously return alpha.
So let's cross over to a very different area, but one that I found very interesting. You co-directed a documentary called Broken Chains. Career-wise, it's not like, it doesn't seem like in the natural progression. And of course, time-wise, I don't know how the heck you did it. So, I mean, what made you do this? I feel very close to the subject matter itself, but I'm sure, I mean, for you, it was much more meaningful. But and how did you manage the work?
Yeah, I would say I was asked if I would make another documentary, and the quick answer was no, because it is a full-time job. The topic was and still is sort of dear to my heart, and I think it's important that we strive for equality as much as we can, at least equitable equality, where
Yeah,
we are
you can
providing.
tell people about what the topic was as well. And
Yeah,
how
no.
it came about.
Yeah, so the documentary Broken Chains just came about because we were debating sort of in our industry, sort of where capital is directed towards, and we saw like two major outcomes when it comes to um, companies that are founded, owned by people of color. Like that was, I think when we looked, it was 1.2% of all venture capital dollars went to founders of color. And then the second thing was, female founders. I think that was even lower. It was like 0.5%. It was like insanely low. And we basically said, how is this possible? Like, it is not that fund managers are not, not intellectual enough. They have amazing networks globally. So is the issue of accessibility of deals? Is the issue of um, the colored community not having the network and the ability. So we wanted to get a sense of what are the causes, and more so, how do you solve this longer term? And it is not so much about, oh, you need to give someone a handout, but it's more about how do you create a level playing field where the everyone starts the race at the same starting line, and no one starts like 100 meters back, and another one starts like 100 meters earlier, and then you're running the same race, just from a different starting point. We wanted to explore, how can we create an ecosystem where there is an equal starting point. So we made a documentary about this. We had some amazing speakers, mainly in the US, willing to share their own story, how they've kind of overcome these difficulties. And our goal was just to educate and hopefully create impact for fund managers, for limited partners, to think about sort of their allocation and their asset allocation, and how you can just create more equity and more equality.
Yeah, and it's a tough challenge because it actually even starts before the starting point from the venture capital point of view. So I mean, the starting point is just getting in the room to pitch, maybe,
Yeah.
but actually years before that, there are even bigger challenges probably that founder had to go through just to get into the room, so to speak. So
Oh,
it's a
absolutely.
pretty big, it's a bigger societal sort of challenge, but we can do our part as much as possible, so to speak, in the venture capital industry.
Yeah, and I think maybe to your question about sort of how did you guys manage? Because we had a team, and the entire team had their day job, and then this was kind of our gig in the evening. So we split our days in two. So we got up super early, again, to get to our day job, run a VC firms or whatever we did, and then we tried to end our days at around 7. And then when we had days of shooting the movie or the documentary, we were oftentimes together as a group. So we had dinner, 7 to 8, 7 to 9, and then from 9 to 1 a.m. we were then doing scripting, the filming, and then the editing as well. So and we have a massive amount of help from amazing people all over the globe. But it was intense. It was very intense.
Yeah, it sounds intense, but I think it was appreciated at the end. It had an impact, and you got the award from Lama, so that was also a great thing. And I think it's a great thing to sometimes stretch yourself and go for something that you feel you want to do, that's outside your core area, right?
Absolutely. Yeah, and I think if you're in a position where you're able to at least create some form of impact, I think you should always take that opportunity and go for it. And we took a month to decide, can we do this, yes or no? And then we said, let's do it. Let's see how far we get.
Yeah, all the best to you for it. So, all right. So let's. This isn't actually in my script, but I was just thinking now that you've moved around a lot. So growing up in Holland, living in Singapore, now in Qatar. Are you like the adventurous type, or are you searching for something, or are you running away from something? I mean, why? What's driving that?
Yeah, it's funny. I'm not that adventurous, to be very honest. But I do. I wouldn't say I have a feel for opportunity, but I think opportunity drives me. When we were speaking about expanding to the MENA region, like a lot of eventually when we launched the fund, people are like, oh, it's kind of a decision that you made 6 months ago. It's like, no, this is a decision we made 2.5 years ago. This is like thoughtful. We did research. We had board meetings, partner meetings to make this decision, and it wasn't like we say in Dutch. We say it wasn't over one night of ice. So it was really sort of a longer decision. So I'm not a guy that says, "Oh, let's pick up our bags and just go to Qatar and see what happens." But we thought about it and did proper research. I would say that the opportunity to expand here felt so strong. I think that is more my characteristic. It's same with
Hmm.
Singapore. When the opportunity feels really strong, and it feels like I'm pulled towards it, um, and I feel like that like me, Michael, personally can make a difference and make a change. That's what I lead all in, and I go for it. Like then my blindness go on, and it also then it has to happen. Like similarly with you spoke about briefly about my karate days. That's a long time ago. But I used to do martial arts, and eventually I was part of the Dutch national team, and this is the same. Like I started with judo when I was 8 or 9, and all of a sudden I see because I was doing judo, I see it's called Warokai karate. It's a certain type of karate.
Hmm.
I saw the lessons and I was like, man, this is me, and I got pulled towards it. Eventually, I loved it so much, I went all in. I did the national championship, the European championship. We were selected for the world championship, and this is again, once I see something that is a big opportunity. Same with the documentary. We thought we could make an impact. Then I go all in. It doesn't matter if I work 24/7. I'm all in. So it's really for me the view of there is a massive opportunity that is untapped, I want to be part of it and try and make it big.
Nice. So, another personal question. I mean, in an interview with Rob Report, one of the things you told him was that after your company back in 2007 got acquired, you became seriously minted. So, how does that change? I mean, how you live your life? Having a lot, money. How does that change your life?
Yeah, well, luckily I didn't have a lot of money. It was it was an okay exit,
Not
but
too
not
much.
massive. Not massive.
Yeah.
I think the one thing that it did give a sense of achievement, that you're able to build something that someone else is willing to acquire and buy from you. That's fairly special. Um, we didn't change anything lifestyle wise. I knew that at some point I would definitely have to work again, so that was never up for discussion. Also, I wouldn't even have it any other way. I would always be working and doing something. I do think that what was pleasant during that time is your ability to invest in amazing founders, and just you feel connected to someone, or to someone's mission, or to someone's vision, and then you're able to put some capital behind it just to get them to a next step. I think that was the most significant outcome for both me and my wife, that we were able to back a few initiatives, and be part of people's journey.
Mhm. Nice. So, I mean, going back to your karate days, maybe, and after that, you did a lot of cycling, and now you participate in Ironman competitions and all these things. What I've noticed is like all the sports you played are individual sports. Is there something about you that makes you like them more than other types of sports?
It's a very good
And you
question.
think it's affected you as an investor? Yeah.
Yes, definitely. So after, well, with karate, I had to make a decision. It was either I would spend more time karate and do it more professionally, or basically finish my university and get a job. Let me put this: my parents were very one directional, said you're going to get a proper job and not pursue a career in karate.
To be expected.
Yeah, which I think they were spot on. So from I was looking for a way to build a career, but still be very active as, let me call it, quote unquote, an athlete. So running was my first thing that made sense, because I could do it anywhere. If I was traveling, I could just get my running shoes and go for a run. I always joined running groups, so I was always felt like I'm running alone, but I'm still within a group. You can have a conversation. It's nice in terms of networking. So I always felt that running was a bit of my core after I quit martial arts. And because running remained a consistent in sort of all my careers, I just kind of stuck to it. And the funny thing is, you can ask any runner. Um, every runner at some point in life considers if they pick up a bike, yes or no. And if you pick up a bike, your next step is you're going to do Ironmans, or at least triathlons. Like every single person that I know who's a dear friend, who's a runner, has gone through that same journey. And for me, it was more about, so Ironman was a challenge. I am the worst swimmer to set foot on this planet, and I
No, I mean,
felt
I can compete with you on that one.
good. I felt that doing an Ironman was just challenging myself, and I guess again that is where I always try to sort of pick something that challenges me as a person. That tends to be individual sports, and it's harder to do this with. Of course, you can do it in team sport as well, but in an individual sport, it is a bit easier to challenge yourself. And for me, it's partially meditation as well, to step away from work, go for a
Mm,
run, or for a bike ride. Just my mind is just back to zero. I can reset. In a team sport, that's a bit harder to do.
yeah. Okay. Going back to the investment side, so I mean, everyone has an anti-portfolio. That company that you didn't invest in, and maybe it became a huge success, or maybe it did for a while, and then it didn't, and you were happy. So I mean, do you have anything, any specific stories that come to mind, and how you reflected on them and what you learned from them?
There's one deal that we missed as a firm, and I was adamant that we should put money into this company. So it's the days of no, still actually the days of OTPs when it really kind of picked up, where there were companies that offered this middle layer, that
Yeah.
offered SMS services, whether it was OTP for security, or SMS services for telcos. Like for some reason I just saw something in this industry, and no one really picked it up. So we found a deal in Singapore. We ended up not investing in the company, but I just the founder was amazing. I think he was, right business, right time, right market, and we just couldn't get it over the line at the investment committee. That company did eventually really well. So the company exited. The founder is now like a serial entrepreneur, invested in his own business again. That's the one thing that I'm still like, oh man, I would have loved to invest in this company. It was not like it was $1 billion outcome from the company side, but it was still a very, very decent
Meaningful.
exit for everyone.
And do you think, I mean, why the investment committee didn't like get over the line with it? Is it because they didn't see the market? Is it something about the tech?
No, we had a bit of I think we had two different views. There was different views on the founding team. I don't think everyone was evenly convinced that this would be the right deal for our firm, as in from the founder's perspective. I think there was one.
Hmm.
I think the second thing was just around, because there was Twilio, and they were fairly big in Asia as well. And everyone said, "Man,
Mm,
Twilio can do this, and there's no need for like a second or a third player." And I was still convinced that the market was big enough to have like a dedicated player in Singapore. So I guess it was both. I guess the market, and a bit sort of discussion around the founding team as well.
So these like last couple of years have been tough in terms of exits. Not a lot of exits happening. IPOs slowing down. That's a global phenomenon, and of course that means less money returning to LPs, which has meant that it's tougher to fundraise as a GP. I mean, have you seen the same trends here in the region? Is it different in any way? What are you seeing there?
No, I'd say it's similarly globally. If you look at some of the data points, I think Magnet did a report on this a while
Hmm.
back, and there's some more data points where part of the GCC remained, not too much affected, and I think it was the effect of local money investing in local and regional funds. Um, which basically allowed for, well, so you can track a few things. You can track new fund formation, you can track fund closings, or you can track liquidity events. So without any liquidity events happening, it you tend to see that the amount of new funds coming to market slow down, right? So that's kind of what happened in 22, 23. You would see funds with more vintages than four funds. They would typically still raise. They have their set of LPs. They tend to re-up. So what happened in general was LPs only re-upped on the funds that they already had a relationship with. So emerging managers had a difficult time to raise their fund one or their fund two.
Right.
What you saw in the GCC was that because of a number of local programs in across the region, some of the fund ones and fund twos were still able to fundraise, which you didn't see in the US, you didn't see that in Asia, you didn't see that in Europe as much, but you saw that here. So I think that was unique from a global standpoint.
Hmm.
But once that is done, you get the same effects, right? So you get the same effects of there's not enough liquidity, hence you'll not see more re-ups. Because there are still programs in the region, you will see emerging managers still raise, but I think they're going to be raising less than they had projected to, because yeah, for typically for families and even for corporate CVCs that are sophisticated, they would still slow down their allocation to venture, a dig for the time being until they see more liquidity come back from their previous fund finishes.
Yeah. So going to the investment side, I mean, what is your favorite question your go-to question to ask founders when you're meeting them?
Oh my goodness, I have a very boring question. I ask it every single time, and I think
Uh-huh.
founders are getting bored of it already. But my go-to question is, what keeps you up at night? And I try to talk about it at length. And for me, it's just important. Like, can you be transparent about what really worries you? Like, I don't want to get
Mm,
boilerplate answers like, "Oh, we're running out of money," or "the market is not big enough," or "I can't hire." Like, those are all common. Everyone thinks about it. But what keeps you as a founder, the person I'm speaking to right now, what keeps you up at night? What really worries you? It just helps me kind of get a sense of who the person is, what their real concerns are, because like you hardly hear founders say, "Oh, I'm concerned I'm not good enough." No one says that, but I know that people think it, but no one says it. So you try to get to sort of a bit more, I guess a personal relationship, because again, to my earlier point, seed Series A, you're going to be with the company for a longer time. You want to kind of understand who you're working with.
absolutely. And what do you think is the going on the investor side? What makes for a great investor? What personal characteristics?
For me, the one thing is true curiosity. So you have to be curious enough to want to understand the business you're investing in, and that goes beyond just the numbers and asking when a company is going to be profitable. But like true curiosity is one important item. And I would say just understanding how to invest. Like the transferring of funds is just one part of the entire equation. But yeah, just understanding which part of the capital stack are you in. How long is your own sort of thesis on how long do you want to invest? Like, how patient are you as an investor?
Mm,
Um, like, not every investor wants to add value. Some investors tell me like, "Hey, Mike, I really just want to be a financial investor. I want to put the money to work. I don't want to be bothered with phone calls, board meetings, or whatever. That's your job." So investors that are very honest about this, and they can also convey this to founders, like, I respect those a lot, because they just know what they're good at and what they're not
yeah,
good at. So I guess knowing yourself, being very curious, just understanding like how to invest,
yeah,
and
the mechanics.
yeah, mechanics, yeah, exactly, like when which instrument makes the most sense. I think those are like the smarter investors. Yeah.
All right, so um, there's this uh, trifecta, that everyone has: product, market, founder. Which do you think is? People have different opinions. Which do you think is the most important for investments?
um if I need to pick one, if there's really like, Mike, you have to pick one, yeah, it's founder always. um
Mm,
the At early stage, the founder plays such a pivotal role in the success of any company in any market. Doesn't matter what the product is. So I would say founder always.
great. And what's the quickest investment decision you've ever made?
Well, so if you go back to my earlier point, you'll know that I'll take my time. But
Yeah.
let me put it this way: I have a sense of what I like fairly quick. And quick means in the first meeting, like the first 20 minutes, I know, yeah, this is actually something that I would like to invest in. So, but making up my mind in terms of asking my fellow IC members to go ahead with the investment, that really takes a bit of time. But I get a sense in about the first 20, 30 minutes.
Hmm. Okay. But you've never made a decision from beginning to end, and taken to the IC in a very quick time. That's not your style, right?
No, no, that is just not. I just don't believe that. And again, other people might be good at it. That's not for me. I need to spend a bit of time because, again, the investment itself implicates something, and one of the implications is that I've done my work, just in terms of ticking all the boxes. That's very hard to do in like 20 minutes, or even
Yep.
like a week sometimes. But to be fair, I might contradict myself. I think the quickest investment we've done, just across the entire fund, was about 2 weeks. That which is fairly
Mm.
quick. From first meeting to basically signing a term sheet was about 2 weeks.
Well, okay. So, the thing about venture capital, of course, is you need exits, and as we are relatively a young ecosystem, you don't have as many exit options as maybe other ecosystems. How do you see this issue of exit options in the region and how it's progressing?
Um, yeah, we spent a significant amount of time on this topic, obviously from a Southeast Asia context. Um, the way we view this is twofold. We really want to focus on companies again that have some potential of growing beyond the region, uh, simply because it makes an exit more organic and natural. You're going to be picked up by international companies quicker, so M&A opportunities would be presented more often. If you look at global private equity firms, global secondary firms, for them it's interesting to see companies that have global potential as well. So those companies tend to be in a bucket where things like M&As and secondaries can work well. If you invest in companies that are pure local, pure regional, and you want to look at IPOs, if you look at the dependency on the stock exchanges across the region, and of course there is enough happening now in Saudi. There's obviously happening in UAE as well. But I want to be cautious. Cautious for the reason is, if you look at the deepest public markets, you talk about the U.S. by far. For a company to list in the U.S., typically a roadshow, it could take them like 2 years of educating, speaking to the analysts, getting in front of analysts, doing your educational sessions, getting your books in order, prepping the IPO setup, doing the roadshow, etc. So I have not seen yet companies where it really makes sense for them to kind of go that route. But if you go the route locally, which is fine, you can list here, but then you have to look at what is the potential from a liquidity standpoint. So, what is your goal to list? So, to give an example, do you want to raise the public markets? Do you
Mm.
want to raise your brand awareness? Is there a local angle that you are doing this public listing? Because it changes the entire nature of the company. So I'd say the IPOs, I foresee 100% like a handful are going to happen more on the technology side and are going to be successful here. I
Hmm.
100% sure of it. I don't think that's going to be the majority of our exits, because what you need eventually, if that's going to happen, is a very deep liquidity pool, both retail and
Right.
institutional. And on the retail side, I just have not seen that happen yet. One good example I always use is, if you look at Japan. So Japan has a mothers board which they allow for smaller technology companies to list. And why have these boards been successful in the past? It's because of a very, very strong retail market,
Mm.
and all kinds of incentives for retail investors to invest in these local companies. You need this entire ecosystem around the stock exchange to work, and it's just not easy. We've looked at markets, Indonesia, Singapore, Thailand, Hong Kong. Hong Kong is doing, with the close proximity to China, obviously, has a different game to play. But I think listing
Exactly.
and running listings successfully over a decade of time takes a lot of work on the retail market and a deep enough pool of institutional capital as well.
Mm. Okay. Let me ask you. I mean, if you had a magic wand that could change reality, what would be the one thing you would change about the regional ecosystem?
I think the one thing I would like to see change is like our, and again from a selfish point of view, is more companies started, um, but more weighted towards started from here, but with a both regional and the global remit. So, like if I would look at our deal for pipeline after waving the magic wand, I would like to see like a 50% split companies that are looking to go global, and 50% companies that are looking to go regional. So the pool of founders is just growing exponentially. I think that would be my big wish.
So let me go through some quick questions. What book do you like to recommend to other, or books?
I would say the book that made there's a single book that made a very big impact on me, which is Reboot.
Mhm.
I think Jerry Colonna is the writer.
Yeah.
Um, I read Reboot. It was during COVID, and it
Mm.
was yeah, it was life changing. It talks about self discovery, self inquiry, honest conversations. For me, it just took my thinking to another level. I had to reading the book. It was really kind of digging pretty deep in terms of, hey, where do I want to see change in myself, and this book really helped me shape the narrative for me. So it's still up until this day, and Jerry knows this because I've written to him about it. It still impacts me the way I operate. I think the way I've grown as a person. Yeah, so that was one of the most impactful books I've read in my life.
Nice. Sounds like an inspiring book. And Jerry is a very interesting character. I've heard him on podcasts. Has a very soothing, calm voice.
Yes.
Um, so, who do you think we should have as a guest on the podcast?
Okay, I'm gonna. Can I name like a few people? Because there's a
Yeah,
few people
absolutely.
that are that are great to hear from. So the first one I'm going to say is one of our Singapore fund peers, Ying Lan Tan. So he runs Insignia, which is a VC fund out of Singapore, but they invest. I think the thesis is Southeast Asia, but they've done some global investments as well. Just he was a early really kind of an early groundbreaker in the Singapore venture ecosystem. And I think that he needs to get his flowers for the work that he has done as an investor and as a fund manager. So that's definitely one. Um, I am going to say two of my friends running funds here in Qatar in Doha.
Hmm.
I think the first one would be Alex Brasmal Ventures. So it's the first homegrown venture fund out of Qatar. The reason I like Alex as a fund manager is very thoughtful. So if you do happen to speak to him or do happen to get him on the pod, he is definitely very thoughtful in his approach and thinking. I like his leveled out worldview and view on our industry as well. So that would be one. The second one would be Alina Utopia. I think they have. What I like about their strategy is that they've decided to go like full emerging markets. So they're between Africa, MENA, and South Asia. So you can say like a very, very emerging market approach. But I, again, also a bit of a level-headed guy. I like the level-headedness in terms of their approach. So those would be names. And then and inspiring, I would say that's a hard name to get. I would say Robert Smith. And the
Oh,
reason, yeah, so harder to get. But I would say
yeah.
the reason why is that they have put so much thought into their fund approach. And if you talk about sort of the complete package around investment, um, portfolio collaboration, added value, adding the corporate element to it, and then combine this with being a fundraising machine. I think that entire package, and if they've been doing this for quite a while, I think like 25 years,
Yep.
is just highly impressive.
Yeah, and quite successfully as well
Successfully as well, yeah,
for a long.
exactly.
Yeah.
So I like those people that have this. When you start something like 25 years ago, and you have this very long term view in terms of what your firm needs to look like and how it needs to operate, and you're able to execute, that just drives my respect. Absolutely. So
Yep.
that'll be another one. But yeah, again, maybe harder to get on any podcast.
Yeah. So I mean, Michael, I could talk to you all day, but we have to wrap up, of course. So I like to close on a note of gratitude. So, what is a gift somebody has given you that has had a positive impact on your life?
Um, okay, this is going to sound cheesy, but it's true. I think the biggest gift is the gift of confidence. And I'll give this shout out to my business partner Hussein, where someone gives you the confidence to run a crazy idea and bring that to execution, and supporting you kind of along the way, and not only supporting but really being sort of this true sort of partner, kind of yin and yang, sort of type relationship. That's fairly unique. But the level of someone saying, "Hey, I trust you with this decision, run with it," is, I think it's something unique because it speaks to a level of trust, and to a level of camaraderie as well. So I think giving someone confidence is at least it's the biggest gift that I could have received. And I've learned this now to kind of move this forward and give this to others as well.
Yeah, it is indeed a beautiful gift to keep, paying forward. And with that, let me thank you for the gift of your time and your knowledge. And thank you for being on the podcast, Michael.
Thank you for having me.
Thank you for listening to this episode of Startups Arabia podcast. If there was something you really liked about what the guest said today, reach out to them on social media and tell them what you liked. And of course, if you haven't subscribed yet, what are you waiting for? You don't want to miss any of our great upcoming episodes. Also, please rate us and give us comments on our social media accounts so that we know how to improve. And also tell us what you like. We don't mind hearing that either. Until next time, this was your host, Ali Zwail.